Alrighty, folks, how are we today? My name is Andrew Taranto, and thank you so much for joining me on another Arcane Investments video. So today we're going to go over ASXC's weekly performance here. Definitely had a little bit of a rough week. We had some good moments. You can see we had some good moments. We really started kind of breaking back into those twos. And which was obviously we were ready there, and then at the beginning of the week we had issues with China affecting the macro environment of the company, and then we had issues with China again actually later in the week when they officially did not make the payment, and it's a real estate company involved. It's not really too necessary to know. If you do want to look into it, you can. It doesn't really affect ASXC too much, which is definitely one of the bigger companies that we're involved in, where we save most of our money into. So we will go over the portfolio, but before we do that, I do want to go into just a quick article that Zacks came out with today, about 9 hours ago, regarding the whole ASXC situation. Which I thought was really cool. The 4 stocks to watch is demand for surgical robots are ready to rise. And you can see that we have 3. I haven't looked too deeply. I don't know what the heck this is. I haven't looked too deeply into Medtronic, but they're definitely doing pretty, they're $130 a share. I know Stryker already. I already heard of that company. Now, let's see what ASXC has it on. They have it on a buy for Zacks. They have it on a buy, which we're currently doing. And let's exit, go back, just because I don't know if there's a back button here. But and then let's see how IRSRG is doing. They're on a hold right now at about 1,000. Not too bad. And let's just see where Stryker's at. I'm curious. And Stryker is at a hold. So the actually only one that's actually at a buy is actually ASXC, but they did bring those up as one of the 4 stocks to be considering. So right here, it kind of goes over what we already know, which was the first documented use of a robot during surgery dates back to about 1985. So there has been obviously a ton of time between then. I would say probably about 35 to 40 years, kind of approaching the 40-year mark in the next few years. So it's just really big movements over the next few years. And I think right here, the global surgical robotics market is estimated to witness a CAGR of 21%. So there's going to be a ton of growth rates, ton of growth going on. And the demand for surgical robots does look to set to grow going forward. So they would be more preferred over the traditional surgical methods. I mean, personally, guys, I would prefer a robot doing my surgery. That's just me. All right, but this isn't a pitch. I'm not looking to pitch. I just wanted to bring up this article. If you do want to know more about ASXC, you can check out my other channel, and I'll make maybe, or you can see my first video. I think I made a good video about them there. So with that being said, let's go into our next thought, which is going to be our new investment, which is the DPW. Now, DPW is an interesting company. I've been following them for a while. You've probably seen them on my watch list if you keep up with a bunch of videos. DPW has quite a bit of interest in my book. I'm very fascinated, first of all, with this analyst who gave them a $25 price target. Not to mention, I'm really liking the support and resistance lines. I'm liking the cost concentration, all low, all leaning towards a buy. And what I'm really loving to see right now is the Q2 net income is just absolutely, out of the park right now. $42 million on net income with a $62 million total revenue, which is absolutely fantastic. And you can see that it just kind of shot up on that Q2. So, kind of crazy that we still haven't seen, the stock price reflect that. So we're definitely interested to see what's going on with that. Not to mention, when you go into the company profile, just so you guys know, they're a digital power corporation. They're engaged in the manufacture and sale of power system solutions for applications in the medical, military, telecom, and industrial markets. They they also operate in basically two segments. And I'm trying to see right here, North America sales and European sales. It offers a range of product variety, including custom product design. Like I said, this is going to be a pitch per se, as I'm just going to kind of give you the heads up that I'm getting involved. I will make a more in-depth video about DPW, but what I do want to look into, these are a couple of reasons why I made a little bit of a buy here today or the other day, was because I really liked seeing this right here, where we're seeing a ton of buying of the stock at about 273, 287. So almost like about $1.7 million worth of securities being bought. And then you can see here, same thing, tons of buying right there, tons of buying. So we're seeing a lot of really great buying in the insider department. So I'm definitely excited about that. Great analyst price target with a stellar ROE above 20%. Ranked pretty high in their industry, a decent, debt paying ratio. All of the graphs are pointing in the right direction, folks. So definitely something I'm very, very interested in, kind of long-term investing into. Like I said, I'm definitely going to want to put more effort into understanding the company, how they make their money. I know that they do stuff with medical batteries, and that's why I like to kind of conjoin them with ASXC to sort of see, as the medical field becomes more digitized and more robotic, we can imagine there will be a higher demand for batteries and various means of powering these objects. So I think given that fact and given, the big wave of tech, I think investing in battery companies seems like a good idea, especially one that is showing to be extremely profitable with insider buying at its or below its current price. So insider bought a ton of shares well below, well above its current price. It was at about 2.7 when it bought. It's now sitting at 2.2. So yeah, we went ahead and made a buy. Actually, since we'll do that, we'll go into the actual portfolio here. So just give me a moment. All right, so here's the portfolio. So you can see not much has really changed since last week. We did obviously invest a little bit more. We were doing really well, actually, up and until today. we were doing really well. Well, not really well, but we weren't really hemorrhaging to a certain degree, but, now we're back on the hemorrhage. So lost about 84, about 12% of the portfolio, but, we all know that, I'm highly invested into these options, and if I can get it to switch over, okay, percent change, yeah. So you can see right here, this ASCC $4 call down 26%, that's not going to stick. We all know that's not going to stick. There's just no reason for it to stick, so I feel confident that that's going to go back up. And this DPW call as well, I just think that, there's a line that it can hit, and I think it's going to get right back up there. So I'm not too crazy about that. I think next week we'll see a good rise again. But if you want to look at the weekly chart, down about 128 on the week. So you can see like a big major part of today's loss was earned this week. We were really only going to be down, if we had just even broke even today, we would have only been down just about like 30 or so bucks. So just a lot of losses today, just basically, a lot of macro stuff going on in the market and no real catalyst on ASXC's side. And, a Zach's article just simply isn't going to be enough to make everybody buy. With that being said, I will say that, like right up here, this is probably where we were kind of peaking at, right around here. And then we saw on the bell, it just crashed and really tried to get itself back up for a second, and then just sort of fell down a little bit further and, kind of at least kind of came up just a little bit towards the end. But you can see here, we did buy the DPW $4 call. Which I think is a reasonable estimate. $4 in 1 year represents a decent amount of growth, and also getting a pretty cheap option there. So definitely bought that, and then we're just kind of stacking up some shares as time kind of goes on. So we're still obviously not doing any big buying. We're still, kind of pretty low in the overall value of the portfolio, but I don't think that really has any negative impacts. I feel very confident in this position, and I know it's like, you could see over the last month, down about 200, last 3 months. I can't imagine that's true, but yeah, there must have been some sort of something that went down. I honestly forget how it goes in the 3 months, but the past year we're still looking pretty up. It's just, I think I'm trying to understand, because this right here, I'm hardly involved, so I'm trying to think, because I was selling out here. So I was, well, not selling out, but I was selling to deal with some stuff, and I remember that was actually during the period of, you know what it was? Actually, I think I had a little bit still just hanging around in the portfolio, and it was probably just calculating that, because we're not down half of our original investment. But I think these right here are pretty accurate. I probably have invested so far this amount. So yeah, it's a little upsetting to be down 30% on the month, but I'm definitely not too concerned. I think that we can start seeing a bit of a change in the trends, hopefully. I think that's really what we're looking for just a nice change in the trends. That's really all we need, and to kind of get back into where we need to be. It's going to take some time. It's definitely going to take some time, but I still feel confident. And even if it doesn't work, it doesn't work. That's part of investing, but I also think that this is a great company with great financials that is set to grow. So there's not a lot of reasons for the stock to not follow suit at some point. You got to remember, guys, there's tons of stocks that do nothing, boom. And that's really something you want to think about. And so many times I go into, let's say, Robinhood, right? You go into the top movers, right? What is it? Top movers, right? Daily movers, maybe that's what they call them nowadays. But yeah, right here, Clean Water Analytics, oh, this is a freaking IPO. Okay, hold on. Not a lot of big movers today, but something like that, where you see it's kind of been down for a bit, but we see that's just these giant upticks of price movement. That I think is really important, and it's something that you definitely want to remember, that if you're ever curious, how do I get into these big price ticks? How do I make that money quickly? Really, what's happening, guys, is there's the people who do end up profiting off of that are the people who are here now, who are here when nothing's happening, who are here when there's no believers, there's no hype, but are still buying, are still staying strong, are still holding. And that's really going to be my philosophy with this company. And if I'm wrong, I'm wrong. At least it's me. I'm not giving it to a hedge fund or anything like that. I'm just doing it myself. And like I said, we're not even really doing any tremendously big buying. We should be able to put a solid $1,500 to $2,000, about that, back into the market very soon, towards the end of the month. So, or towards the end of October. So about a month away to doing that. And if we could see, if it continues to go sideways or even a little bit down, or even a lot more down, I really wouldn't mind. I might have to go for broke on $600 or something along those lines, or whatever the total investment is at this rate since I began, but I'm willing to take that loss if it means to get into a better position down the line. And really, I'm not taking the loss because I'm not going to sell, so it definitely is still, it's a fine position to be in. And we might have to just wait a little bit until those profits are realized, which is all right, but it's definitely something you want to keep your head on. And what I'll most likely do is, for the bigger buys and for the larger equity and for the greater percentage of my portfolio, do in the money options long term, obviously, and then mix that in with shares. And for DPW, our allocation for DPW right now is going to be 15%. And I feel very solid about that company. I think I'm going to just keep it at 15%. And I feel good about that. So whenever I feel like there's a misweight or something along those lines, if there's too much DPW, we'll sell off, look to buy some ASXE. If there's too much ASXE and it's getting too big, we'll look to sell off and buy some DPW. And I think that that's going to work pretty well. And we'll look to maybe do that on one more company, just have ASXE be like the lion's share at about 70%, and then split the other 30%, 15-15, with two other ideas. So we have DPW, ASXE, still looking for our third. Not exactly sure where we're going to go in that direction. There are a few ideas that I have, a few companies that I really like, and a few industries that I really like. But I might just stay medical robotics. We will see. But yeah, so that's basically it. That is the whole Friday breakdown just so you guys have a good idea as to how the week went. Lost, about 20% of the portfolio. So definitely don't love it, but, had things not happen today in such a dismal way, it would have just been a very small 6% loss. And to be honest with you, I think looking at some of the volatility that has been happening in the option department, I do believe that there are, big buys coming in, and I think that's really important in terms of getting ready for a liftoff soon. So, just going to kind of sit on our hands here for a second. We know what we got, no reason to fold, no reason to sell out, just going to kind of sit on my hands for now. And then look to maybe make some more investments later next week, depending on various bills and all that life stuff. But definitely over the next few weeks before we start making big buys, make a few more small buys on red days, of course. And hopefully find myself in a position to finally get to, allocate a little bit better, because I think that's really, I don't think I want to sell and put it in my pocket, but I'd like to sell and reallocate resources just so that I'm always in a good growth position where I'm not feeling like I'm getting too worried about things crashing out from under me. But we're going to have to see some growth for me to even consider those ideas in the first place. But with that being said, rough week, definitely rough week. Hoping for a better week next week. Don't really know if I'll get it. I really don't. There's no catalyst. There's nothing to consider like, oh, this is it, boys. This is going to be the week. It's really just going to be a matter of just hoping for the overall stock market to do well, which might lead to a increase in just the Russell and then just ASXE, and people might just start kind of buying. I don't know. But there is no specific catalyst to look forward to. So there's no way I can predict or even try to predict. So I think it's just better to think the way I'm thinking and leave it at that. All right, guys, with that being said, thank you so much for stopping by. This has been Arcane Investments. Thank you for stopping by for another video. Please join the Discord if you ever want to talk about ASXE or any of the stocks that I'm currently invested in. And there are my socials, which you can follow me on. And that's about it, guys. Thank you so much for joining me, and I hope you have a great rest of your day.